Hey everyone, welcome back to Corporate Decoder. Today we're diving into TransDigm Group's latest quarterly report. Prepare for some turbulence, because digging into this aerospace supplier's finances is like trying to assemble a jet engine with just a wrench and a dream. We'll see if their profits can take off or if they're headed for a crash landing. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss your thoughts with other corporate decoders. Okay, so what's the story? TransDigm, a big player in the aerospace parts world, just dropped their financial results and there's a lot to unpack. We're talking about rising sales, juicy profits, and some serious debt that could make even Scrooge McDuck sweat. Is this company soaring high or just a paper airplane waiting to nosedive? Let's find out. Alright, time to navigate this financial document. Let's jump right into the numbers that tell the real story of TransDigm's performance. First up, the balance sheet. Think of it as a snapshot of the company's assets and debts. Looking at a key number, say they have about $2.4 billion in cash. That sounds like a lot, but hold on, because last year it was way higher, like $6.2 billion. Where did all that cash go? Well, keep watching because we're about to find out. Now, for the income statement, this report shows what they made and spent. Check out there. They sold $2.15 billion worth of parts. Nice. Last year it was less, around $1.9 billion. So things are looking up in sales. But what about their expenses? It says they spent $876 million to make those parts. Last year it was a bit lower at $767 million, spending more to make more. After taking all the money in and taking all the money out, we see a bottom line of about $47 million. They are making money, to be sure. Now, let's follow the cash. The statement of cash flows shows where their money is coming from and going to. Operating activities provided about $900 million in cash. It's a good sign that main business operations are bringing money. They invested almost $100 million back into the business. This is good since it means that they invest back in to keep up with demand. And here's where some of that cash went. They spent $369 million to buy back their own stock. It's a way to boost the stock price. And what about those giant payments? Time to scroll to see. Whopping $439 billion went out the door. That explains the cash drop. This is a one-time payout to shareholders, so those big payments are because of these big dividends that happen once and then everyone moves on. This can be good for investors, but can be bad for the company since that's a lot of cash that could have been used for investments. To learn more about what happened with that cash payment, let's check the statement of changes in stockholders' equity, aka the owners of the company. As we saw before, TransDigm did, and also some... Okay, now let's talk about debt, because TransDigm has a lot of it. This is the debt section. It's an important thing to look at when looking at public companies. Huge $24.3 billion. TransDigm uses debt a lot, and this is common in their industry, but it can be risky. All in all, they have $24.4 billion in long-term debt. That's huge. Why all this money being borrowed? Some went to... Buying these companies is a use for all that debt. A company has to put cash in and spend to buy companies. Looks like they like buying out other companies. They bought more companies and have more than one entry here. Of course, with all these upsides, there are always risks. What does management think about the company? The management talks about important things in the section like the economy, raw material prices, and even things like cyber attacks. If people stop flying, TransDigm sales will go down. Think about another pandemic. Also, they are also doing a lot of mergers. There is always a risk. Would not be great. These risks will hurt the share price. So what's the verdict? TransDigm is doing well, sales are up, and they are profiting. However, the company is carrying a huge amount of debt. Right now, TransDigm seems to be well managed, but these high debt situations are always something that might hurt a company in the long term. Alright, that's our breakdown of TransDigm's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.